So I know that you've been looking at a particular stock this week, and that is Supreme Ventures, because their financial results are out, their year-end results are out. How did Supreme Ventures do?
It was a tough year for Supreme Ventures. While their top line gaming income went up by 5% to $52.67 billion, their consolidated net profit went up from 2.44 billion to 1.78 billion dollars. And one of those major hits was from Hurricane Beryl. That was one major impact. They had higher operational costs at Supreme Ventures Racing Entertainment Limited. That's the promoter slash operator of Caymanas Park. So it was a pretty tough year for SVL, and it kind of showed up in the dividend payments as well, because Supreme Ventures, alongside Carreras, the sin stocks, they have what you'd call very gracious dividend policies. So what Supreme Ventures, they tend to pay out 90% of their recorded profit for each period, vis-a-vis a Carreras which pays 100% of their profits to shareholders. So in the case of SVL, for their dividend with respect to the fourth quarter, they just declared a dividend of 0.0455 as a dividend, vis-a-vis 0.1088 in the prior period last year, which is a 58% reduction, which should kind of tell you the impact SVL felt within the fourth quarter. Now, at the recent Mayberry briefing, Gary said that they're doing a lot of cost savings and looking at efficiency measures to bring the businesses, or actually the different subsidiaries, into the black. So, we saw earlier today's story about, some executives at SPL, apparently being made redundant. We sadly saw the departure of Jesus Johnston. He was the CEO of Supreme Ventures Gaming Limited. And, we also have seen, SPL, just try and see what other they can put into place from their subsidiary's growth perspective. So Supreme Ventures Fintech Limited, they recently, were able to onboard some utility providers for bill payments, and they're looking to also grow the remittance side as well. And they're still looking to the overseas expansion route. So pretty tough year for SVL. Significant contrast to Carreras, which had its best year ever, which is pretty surprising, because I'm not sure if it was just a case of higher prices or just the introduction of views in the market that got more people smoking or vaping, but two different tales of two different sin stocks. Short to Campari, rum sales were pretty good despite the disruption last year, and they said that they worked out the kinks in terms of the shortfall or the shortage that occurred last year in terms of rum production.
I'm kind of surprised at that performance by Supreme Ventures, because along with the other sin stocks, as you call them, I feel like those are companies that will always make money, and especially when times are hard. Because if people are struggling, they're going to want to take a chance to try win that cash pot to make up for the shortfall.
But the irony about it, Kalila, customers winning is a bad thing for SVL. So more gaming is good, but when more persons are winning the lotto, it's a bad thing, because that's an expense they have to recognize when it does take place. And just to go into further context, yes, persons will likely be taking more chances to bet to try and earn more income, but at the same time, the product disaggregation also matters. So what do we mean by that? So Supreme Ventures, their largest business is Cashpot. It is literally as their biggest product. Just calling a number of a random spinning, or a ball being spun in a machine, that's their biggest business, mainly between Kingston, St. Andrew, and St. James. Other areas like Just Bet, there are other draw games in the daytime, those, are still growing, but Cashpot is just that strong business venture. And they said that they're currently in Ghana and still testing out the market and learning the different elements on the ground. So it's an interesting time, especially since they're trying to expand whilst at the same time, managing their financial affairs, because I found it pretty weird that, SVA would have taken a $498 million short-term loan or margin loan from Mayberry Investments. It leveraged equity portfolio, which isn't a bad thing, but it just seemed very weird because SVL business typically, is known to have very robust positive operating cash flow. And, SVL currently has a $3 billion bond coming due in October, has a $500 million bond coming due in January 2026. So right now, it's just an interesting time to see how they're going to circumvent and navigate this period.
I heard you make the contrast between SVL and Carreras. Strong Link says Carreras up by close to 100% in the last few months.
So if you go back to July/August 2026, Carreras was around $8 at the time. It's trading at $16. Well, it traded at $16 up to the prior week. So 100% increase in the stock price. And, the earnings that we saw when the audited numbers came out kind of justified that, stock price increase. And alongside the higher dividend payouts, a lot of shareholders are pretty happy right now because Carreras is just that consistent stock alongside Scotia and SVL that despite any season, any weather, that dividend check is going to come into your bank account.